lot of publicity and it was highly criticized, especially from other asset management firms, I would say. And so we were watching Bitcoin like a hawk, and there was the European sovereign debt crisis threatening to rear its ugly head again. And so we were watching what happened to the Bitcoin price.
Hey guys, welcome back to Everyday Finance. In this video, Cathie would discuss about Bitcoin. According to Cathie Wood, we were closely monitoring Bitcoin like hawks, and the European sovereign debt crisis was threatening to once more raise its ugly head. We were observing what transpired with the Bitcoin price in line with other markets, be it the BS sovereign wealth bonds, or at times the financial markets were collapsing and Bitcoin was creeping up. And we noticed how fascinating it was, so we started to think, okay, could Bitcoin be an asset risk as well as an asset risk? Was the first time Cathie Wood mentioned, this could be a hedge against counterparty risk was a factor in the financial ecosystem's collapse, and it was operating in such a manner. The majority of those who were first introduced to Bitcoin were presented to it as a hedge against inflation, observing the national debt problem and noting how strangely it is acting and realizing that deflation is a possibility. And lots of things Cathie would discuss, so please watch the video to end. And share this video and subscribe our channel Everyday Finance. Thanks.
Well, actually, my history with Bitcoin goes back to 2011, before we started Ark. Brett Winton and I were at another firm, and we were talking about this curiosity called Bitcoin during our research meetings. And then when I found Ark in 2014, Brett joined me, and we decided not to split the next generation internet, which was a big theme of ours, into what has become Bitcoin, crypto assets, digital assets generally, and artificial intelligence. But when we understood in 2014 and 15, as we did our first white paper, how big this was going to be, and we really learned it with Art Laffer, who's been my mentor throughout the years from an economics point of view. He's a good friend. And I just wanted to share this concept with him. And then when he found out what it really was, he did want to collaborate on the paper with us. And so our first white paper was in 2015. And we took our first position, giving our clients exposure to Bitcoin, in September of 2015, when Bitcoin was roughly $250. And it was really interesting at that time. We had been around for roughly a year, a little more than a year as a firm. And when we put Bitcoin in the portfolio, I remember the media, some people in the media were saying, oh, well, that's great. They're just trying to get attention. This is a great marketing gimmick. And that's when I realized, oh my gosh, this could be even bigger than we think. People are making fun of us. And so there began our journey, and we've been there ever since. And I can tell you our conviction has never been higher. Absolutely, Yassine. So yes, when we took our first position, it got a lot of publicity and it was highly criticized, especially from other asset management firms, I would say. And so we were watching Bitcoin like a hawk, and there was the European sovereign debt crisis threatening to rear its ugly head again. And so we were watching what happened to the Bitcoin price as the markets elsewhere, whether they're the sovereign wealth bonds or the stock markets themselves, were imploding at times. And Bitcoin was inching up, and we thought, oh, that's so interesting. And we began to think, okay, could Bitcoin be not only a risk-on asset, but a risk-off asset? And it's the first time that I remember saying, this could be a hedge against counterparty risk in an implosion of the financial ecosystem. And it was acting that way. So most people, as they were being introduced to Bitcoin, were introduced to it as an inflation hedge, a hedge against inflation. We were looking at the sovereign debt crisis and saying, wow, it's behaving very interesting. This is the threat of deflation, and it's doing very well. And then, of course, we had the regional bank crisis this year. And lo and behold, it was especially after 2022, where we had Terra Luna, Celsius, Three Arrows, FTX, basically going under. And here, as the regional bank index in the United States was imploding, actually, Bitcoin went up 50%.
According to Cathie Wood, what were we saying regarding FTX and all of the negative news from the previous year? We essentially stated that this proves the premise that Bitcoin is significantly, FTX was totally centralized. It is utterly opaque and ultimately proves to be fake. And what about Bitcoin? It's entirely decentralized and transparent thanks to digital wallet address. And well, it's essentially a massive neighborhood watch program, since so many individuals are now keeping an eye on those whose livelihoods depend on this, not only in the developed world, but also, particularly in the emerging markets. Thus, it assisted us in demonstrating the argument deflation, whatever it meant, means that there is no counterparty risk. Unlike our banking system, this open, decentralized environment, the cause was counterparty risk, circa 0809. The reason behind the financial market seizure and paralysis, it was necessary for law enforcement and tax authorities to step in and stop Bitcoin. Let's back to the Cathie Wood interview.
And then we said, aha, there was a trace of this back during the 2015 time period. But this was, hey, Bitcoin, now we know, is not only a risk-on asset and does very well typically as some other markets are doing well, but it charts its own course. And it is also a risk-off asset. How many assets are there like that out there? So big aha moment last year.
I really think that moment will go down as the event that really marked the perception shift from Bitcoin to being risk on to both risk on and risk off. And now,
can I just say something about that to help people understand? First of all, what were we saying about FTX and all of the bad news last year? We basically said, this is proving the point, the reason Bitcoin is important. FTX was completely centralized, completely opaque, and it turns out completely fraudulent, right? And what do we have in Bitcoin? It is completely decentralized, completely transparent by digital wallet address, and basically a giant neighborhood watch system, because there are so many people watching now, people whose livelihoods depend on this, not just in the developed world, but especially in the emerging markets. So it helped us prove the point. And then on deflation, what was that point? Well, there is no counterparty risk with this transparent decentralized ecosystem. Unlike our banking system circa 0809, counterparty risk was the reason the financial markets seized up and were paralyzed, and why the financial authorities and fiscal authorities had to come to the rescue. That will not happen with Bitcoin, unlike any other asset class. And I'm really excited that you're updating the paper we wrote in 2020. Actually, you wrote in 2020, which put forth this case for not only institutional investors, but retail investors, of course, right? So we're updating that, how well it diversifies portfolios. And what that means is it increases returns per unit of risk because of the low correlation to other asset classes. So I'm excited for that paper. And I'm also so excited for some of the big ideas that we're going to put out, I guess it's in a few weeks, that will help people really understand this story.
According to Cathie Wood, as of right now, over 15 million of the 19.5 million in outstanding Bitcoin supply are in the hands of strawn holders. And, well, we are aware of the overall supply will only ever reach 21 million. Therefore, PR must seize it from now that institutions are likely to be granted. These long-term holders trust the SEC's approval, which we hope and think the next week they plan to raise the price, which they will now demand because this resource is so rare, institutional pressure to acquire it won't materialize. Abruptly, you become aware that there are numerous boxes to check and other things. However, Cathie Wood believed that the long-term holders are aware that a significant buyer is approaching. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.